Hello and welcome back to Explain the Charts. Today we will be looking at the EURUSD pair and giving you our in-depth analysis of recent market movements and correlating them with the current events. As you can see in the first scene, we are currently viewing the daily chart for EURUSD. We can see here that the overall trend in the market has been bearish for the past 2 months, but a potential bullish reversal is shaping up on the chart, although we cannot be completely sure. However, the market still presents opportunities both for short and long-term trading. Let's start with some recent news. According to recent Google searches and financial websites, there is a mixed market sentiment regarding the EURUSD pair. The euro has shown some resilience against the dollar after a post-US election drop, but concerns about US inflation and global economic factors are prevalent. The recent drop in several European stock markets, as well as the US market, does present reasons to be cautious and bearish. However, we cannot rely on the news alone, and we have to turn to the chart data to make our informed decisions. On the daily chart we are currently looking at, we can identify a support level near 1.05 and a resistance level near 1.10. If the price breaks above 1.10, then there is a strong possibility of the reversal to a bullish sentiment, and we can consider looking at various long-term trades. However, if the price falls below 1.05, this strengthens the bearish outlook, and we can focus on various short-term trades. Now, let's switch to the 1-hour chart to get a closer look at the recent price action. Here we can see some short-term fluctuations, but the overall trend is very similar to the daily chart. There have been several short-term rallies, followed by sharp declines, confirming the bearish sentiment. A key level to watch here is 1.055, which, if the price breaks below, shows a continued bearish sentiment and allows us to enter various short-term trades. Let's zoom in on the 15-minute chart. Focusing on the last 24 hours of data, we can observe smaller candlestick patterns and high-frequency movements. This can be very useful in confirming our trade decisions, which are made from observing the larger chart patterns. This scene is very useful in assessing the short-term trades. The price seems to have consolidated around the 1.05 level in the past day, and this may present the opportunities to enter trades. However, be wary of high-frequency trades and look at larger picture as the market seems very volatile at the moment. If you're considering short-term trades, focus on the price levels we identified on the other charts and use the 15-minute chart to help time your entries and exits. If we see a break above 1.055, this would confirm the bullish trend in the short term. We also need to note the high volumes, which also confirms that there is strong bullish movement at the moment. To summarize the key price levels, we have support near 1.05 and resistance near 1.10 on the daily chart. A break above 1.10 would signal a potential bullish reversal, while a break below 1.05 reinforces the bearish outlook. On the 1-hour chart, 1.055 is a key support level to watch. The likelihood of a bullish reversal depends on several factors, including sustained buying pressure, a strong break above 1.10, and positive economic news. Conversely, sustained selling pressure, a break below 1.05 on the daily chart, and negative economic data reinforce bearish predictions. It's important to note that these are only potential scenarios, and the actual market movements may differ based on various unpredictable factors. In the short term, keep an eye on the 1.055 level on the 1-hour chart. A break above this level could trigger a short-term rally. However, high volatility and unpredictable market movements must be taken into account. Coming up in the near future, the upcoming ECB meeting and the November consumer inflation report could significantly impact the EURUSD pair. Keep your eye on these events to gauge potential shifts in market sentiment.